Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. As the extreme market turbulence settles, gold bulls have re-entered the scene since late last week, though upward momentum faces some pressure. The persistent decline in the U.S. inflation, lowered fears of a severe economic downturn, and a rise in demand for geopolitical hedges have helped gold regain traction with buyers. Despite these positive factors, breaking past historical highs will still need some new catalyst. This week, U.S. CPI and retail sales will be key for traders, likely shaping gold's direction. Looking at the gold against US dollar daily chart, gold prices are still bouncing between $23.50 and $24.80, but there's been a clear uptick in buying interest since last Thursday. Gold climbed back above $2,400 last Thursday, and after a slight up on Friday, hit an intraday high of $24.73 on Monday, just $10 away from the record high. In just 3 days, gold prices jumped by 3.8%. It seemed like we might break the $24.83 record, but the momentum stalled near July's high of $24.80 on Tuesday. This could mean that bulls are getting cautious or that many long positions are stuck, signaling a potential pullback. If bullish momentum continues, $24.83 is the key level to watch before we possibly push towards $2,500. While on the flip side, if bearish pressure increases, the 50-day moving average and the lower range of $23.50 might offer some support. Well, even though the daily charts show some pressure on bullish momentum, I still think the case for a gold rally is pretty strong. Last Thursday's drop in the U.S. initial jobless claims eased some recession worries, while Japanese authorities suggested they won't tighten policies further, at least in the short term, to keep the market stable. This news gave a breather to traders who were holding funding currencies and even cash due to very conservative risk preferences, and those who had to exit the market because of yen carry trades unwinding. Fundamentals are back in play for gold. And from a U.S. economic standpoint, while there's some slowdown in growth and labor data, it's still far from recession territory from my perspective. The cooling of July's PPI has increased expectations for more Fed easing this year. We're seeing a lot of buying in the U.S. Treasuries, with the 2-year yield holding steady around 4%. The reduced opportunity cost makes a bullish outlook for gold quite clear. And geopolitically, the close odds between Harris and Trump on platforms like Predicted and Betfair have heightened uncertainty about the U.S. election. As the Democratic National Committee prepares to meet next week, political turbulence in the U.S. has increased gold's appeal as a safe haven. While this demand for safety is also driven by escalating tensions in Ukraine and the Middle East, particularly with increased U.S. involvement in the Iran-Israel conflict, the growing uncertainty is pushing people to hold gold to hedge against potential market volatility. So overall, gold prices are holding steady at high levels with reduced market panic, lower U.S. PPI, and increased geopolitical demand, all pointing to a bullish outlook. But whether gold can push through will depend on tonight's U.S. CPI and tomorrow's retail sales figures. If core CPI rises more than expected on a monthly basis, say above 0.3%, investors might lower their expectations for a big rate cut, which would be, I would say, just relatively bearish for gold. Well, conversely, if the data comes in lower than expected, like a monthly increase of less than 0.2%, a 50 basis point cut might become more likely, putting pressure on the dollar and potentially pushing gold above $2,500. Also, keep an eye on the July's U.S. retail sales data coming out on Thursday. Strong numbers might ease concerns about the U.S. economy and weigh on gold, while weak data could have the opposite effect. So that's pretty much for this week. If you have any ideas on how the upcoming economic data might impact gold trading, drop a comment below and let's discuss. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!